Hello everyone. Today we're going to have a brief market recap, then talk about the UK current account figure coming out, Canadian GDP, and US new home sales. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my daily market comment. The dollar was volatile yesterday as some US data beat expectations and some disappointed. There was no real consistent picture coming out of it. The market's now focusing on US trade issues. The appointment of Peter Navarro as head of a new presidential office for U.S. trade and industrial policy means totally new policies are possible. There are reports that the Trump administration is considering imposing a tariff of 5 to 10% on all imported goods. The Canadian dollar, Mexican peso, and Korean won weakened on fears that trade with the U.S. will be disrupted. Those countries export a lot to the U.S. The euro rallied on a Reuters report that the ECB plans to keep the debate about further stimulus closed until after the German elections in September. But reports that troubled Italian bank Monte Paschi is unable to raise enough money is a key risk for the euro. We got to watch that development. Otherwise, the markets are in full holiday mode by now. And today's indicators, the day before the Christmas break, probably aren't going to be enough to jolt them out of their ranges. The data proper begins with the UK third quarter current account balance. This seems to have more of an effect on sterling when it beats estimates than when it misses. The market's looking for a slight narrowing in the deficit, or at least for it not to deteriorate further. That could provide an excuse for those with short sterling positions who've been looking to close them out ahead of the holiday anyway, to buy the currency. So it could be good for the pound. The Canadian GDP growth is expected to be pretty sluggish in October. Added on to the weaker oil prices and the slow rate of CPI inflation revealed yesterday, the news could push dollar CAD even higher. U.S. new home sales are expected to rise. This would follow the rise in existing home sales and could help to convince people that the housing market is still healthy despite the move up in rates. That would be positive for the dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.